The following is a presentation of TFNN. The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 19th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. Oh, I wish everybody out there was watching us on TigerTV right now. You know, if you're listening on your radio or your mobile device at TFNN.mobi, thanks so much for doing that. I'll describe to you what it is that we are looking at. And, of course, you can catch the live stream of the show. If you go to the homepage at TFNN.com, upper right-hand side, you'll see a button with three little smartphone-type devices. Click on that. The show will stream live. Of course, the archive is on Channel 9, and we are looking at a rainbow. I was trying to get a nice picture of the rainbow at the West Maui Mountains. One of my favorite things to do was to, it still is to leave, be on the island of Maui and take a nice little boat ride over at about 5:50, 6:15 in the morning over to Lanai, right out of Lahaina, and nothing like seeing some rainbows in the West Maui Mountains. But this morning, the tool is, just because you don't see it doesn't mean it's not there. Now, it's really what's referred to as functional fixedness. Now, functional fixedness is a bias that limits us to using an object only in the way that it is traditionally used. Now, sent out an email yesterday, and some of you may have seen this, so I'm going to repeat some of it because it's just simply so important to each of us. Because back in, I think it was 1945, Carl Dunker, he defined functional fixedness as being a mental block against using an object in a new way that is required in order to solve a problem. That's so important. Now, this block, folks, it limits the ability of us to use components given to us to complete a task, as we cannot move past the original purpose of these components. For example, if someone needs a paperweight, but they only have a hammer, they may not see the hammer as a paperweight. That's obviously a simple thing, but this inability to see the hammer's use as anything other than for pounding nails, that is what is called functional fixedness. Now, it's because a person couldn't think to use the hammer in a way other than its conventional function. Now, I've got two grandkids. And I can tell you that as 5 years old, so 5 years and younger, 6 years and younger, they show no signs of functional fixedness. It's because at age 5, at age 6, any goal to be achieved with an object is equivalent to any other goal that they have achieved thus far. However, as they start to get older, 7, 8, 9, children have acquired a larger sample size, and the tendency begins to treat the original intended purpose of an object as its only use. Now, why is this important? It's important for a number. Let me give you another example here. This is one that I actually sent out yesterday. It's called the candle problem. And for those of you that haven't seen it or you're not watching us, what I'm going to give you is I'm going to give you a candle, I'm going to give you a box of matches, and a box of thumbtacks. And your goal, your mission, is to take those three objects, and I want you to fix the candle I want you to be able to fix the candle to the wall, light the candle, and it can't drip. It can't drip down on a table below. All these things are sitting on a table. Now, the question is, how would you do that? And most people immediately say, hey, Steve-O, I take the thumbtacks, and I'm going to go ahead and stick them into the candle and attach that to the wall. Others say, hey, I'm going to light a half of the, one side of the candle. I'm going to go ahead and then glue that, in essence, to the wall, and then I'm going to light it. The problem is you light it, and it drips. Now, the thing is, And this was tested with MIT grad students. It's been tested all over the place. And what's amazing is it takes folks quite a while to be able to actually figure out the solution. Now, the test is they take the same type of IQ folks or what have you, and from the same universities. You can test it on your. You can look while you're with family this week. Go get. You got candles in the house. You probably have a box of tacks and certainly a book of matches. Go test it yourself. Don't prove me. But if you give those same components and do it with two groups, separate two groups and see and time it and see how quickly one group is able to find out the answer. It doesn't matter whether somebody gets paid more or what have you. It's called functional fixedness. It's about being able to use objects in a different way out here. And when you take, if I were to give you a candle, a box, then some thumbtacks, not in a box, and a book of matches, you will find that people will be able to solve that problem. Even though it's the same components, it's just simply delivered differently. They'll be able to solve that problem much quicker because when they see it like that, then they say, oh, this is pretty simple. Take the box, use the thumbtacks, tack that to the wall, stick the candle up inside the box, light it on fire, voila, there you go. The wax is not going to drip on the bottom of the table. The solution was always in front of us, and that's really what I'm going to be doing this evening. And thank you to so many folks that have signed up. It seems like we've got standing room only. Of course, you're able to do it online, so you can stand up, you can sit down, you can do whatever. We've got room for more. You can still take advantage of it. Now is the time to sign up. And it's just go to the homepage at TFNN.com. It's very easy to do. But what I'm going to do is I'm going to compress really what I consider to be decades, what I consider to be at least thousands of hours. I don't know how many thousands, 15,000 hours at least. I'm going to compress the best 15,000 hours into 60 minutes. It's probably less than 60 minutes because I like to be able to get right to the point. I'm going to take a chart here that looks like this, that quite frankly, if you are brand new to a chart and you take a look at this, you wouldn't know what the heck that really means. You'd even question, what is the red candle versus the green candle? That's fine. And I want to be able to take, whether you look, that functional fixedness, the folks who are technical analysts, they need this course more than anybody else. Because just like Carl Dunker's problem, it would take the smartest people that would take a look at tools and only use them in the way that they were intended. That's who this course is really for. However, the beauty is, if you are new to technical trading, then this is the place to start. This is where I would start my kids. This is where I am going to start my kids. I've tried the A to B equals CD. I've tried bearish engulfings, bullish engulfings, candlesticks, the wars, and so forth. It takes somebody who wants to put in a lot of energy and effort in order to do that. Here's the same chart with Japanese candlesticks, and we'll take a look at some today. We're going to take a look at battle lines in the markets because they provide us with information. However, this chart that we're looking at right now, it's got my Rhodes momentum indicator notations on there. I'm going to describe how they're formed and what they mean because even just seeing a chart like this, that doesn't help. However, what I do know, folks, is that we are visual. And when I take a chart and I apply the visuals to it, the red light, if you're driving and you're listening in your car, you know what a red light is, and it's the same thing on a stock chart. Now, I had to use blue instead of green because my candles are green. And so I had to use blue for my green lights out there and light blue for supercharged. That's when you're on the highway in Germany out there, and you want to take that Beamer, your Benz, or whatever car it is that you're driving. You want to take it up, a few notches. Maybe just traveling at 150 isn't good enough, so you want to try to get it up to 180 or something along those lines. And, of course, the yellow colors, they say caution. And that's what these charts, that's what this indicator, that's what being able to read a chart is all about. Then, of course, I apply a couple of different support or resistance line. I'll describe what all of those are this evening, folks. It's all about a sense of urgency, like we were talking about yesterday. If you didn't catch yesterday morning's show, you really should. I talked about the Eastern legend where the fair maiden, was offered that rare gift of being able to give a bag of pearls and being able to select the best pearl. However, she could only do it one at a time. She had to take those pearls out of a bag and make a decision right then and there. Oftentimes, and once she passed on it, she passed. That was it. And oftentimes in life, there are opportunities that are presented to you, and you just simply pass because you're too busy or whatever. Well, the cool thing here at TFNN is that if you are too busy, if you're out shopping, that's a beautiful thing. Just sign up anyways. This course is going to be it's going to be archived. It'll be on your members page Friday evening. You'll be able to look at it over the weekend, over the holidays when you have a little bit of time out here, and you'll allow Stevie-san here to be able to teach you something. So, folks, life passes you by. Don't wait. Do it now. Do it now. Go sign up right now. It's going to be this evening at 6:30 p.m. Look, by signing up, you get access to my newsletter service. There's no charge to your credit card, so that's a beautiful thing during these holiday seasons. That means you get access for 30 days to an incredible education. I want you to be able to sign up, but let me prove myself to you ahead of time. Then take advantage of that of the money management workshop that I've got. That's included in the package. You get the position size calculator. You get a ton. Folks, do not let functional fixedness stand in your way of progress. Now, speaking of progress, how about yesterday's markets? Now, don't you think it was important over the last several days as we were taking a look at patterns? First I went back to the, let's go back to the daily chart here for the index futures, and we were taking a look at the ES Mini as an example. We were taking a look at the Dow futures. Let's take a look at the Dow futures here first. Dow futures, as we were looking at yesterday, I said, I don't have any idea what the Fed's going to do, how the market is really going to react. But if we discount all of that and we just were to look at patterns, and now we're going to teach you about a Gartley buy or a Gartley sell pattern out here. This couldn't have been more perfect, couldn't be more textbook out here. Because, yesterday wasn't the only big move we saw in the markets. Sunday was really the first big move because the markets moved down low. In the case of the Dow futures, they got down to 15,608. They got up to a high that day of 15,879. That was a 270-point move on that day. Big move on Sunday night to by the close on Monday, an intraday session. Now, what the Dow futures did, as you know, they created a 0.786 Gartley pattern. If you'd like to learn these patterns, look, I've got a workshop that will absolutely get you up to snuff right away. But formed a nice Gartley buy pattern, nice 1.618 expansion out there. And if you trade what you see, especially when the Dow was coming down into a level of a consolidation, 1,000-point consolidation that it has broken out of. Now, this time is a real breakout. The Dow broke out of the consolidation box on November the 8th, came back, and when you break out of a consolidation, I like to see a market come back and test it. Well, in essence, the only test that we really had was on November 13th. That was until Sunday evening. Man, we took off to the moon yesterday. Guess where the Dow futures are headed to? Doesn't mean today. They're headed to at least 16.3. I think it's 16.5. I think this is a 1 to 1.272. A to B equals C to up to the upside. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, it's just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures are off about 30 points right now. ES Mini's off about 5.5, trading out at 17.99. Nasdaq futures off 12 points. They're trading at 34.96. King dollar back 7 cents right now. It's trading out at 80.14. Gold and silver getting the kibosh this morning. Gold is off $33 right now. It's trading at 12.02. The low so far is been looks like 11.97. I take that back. Silver is trading out at $19.23. It's been down to $19.11. That's off 4% this morning, off 82 cents. Now, let's first go back to yesterday's market. We were looking at the Dow futures. The ES Mini had the same Gartley buy pattern. So you had a nice Gartley buy pattern. You had conviction to the upside as that C point was being made. So if we just simply discounted the Fed or what have you, and the news that was coming out, what we were taking a look at here was just simply bullish patterns that were present. Now, if we take a look at an intraday time frame and say what really did happen yesterday as the market moved down, was there some technical pattern or anything that we discuss here at TFNN or anything that would have given us a clue when the market was pushing lower? Now, as during the first 30-minute session here, when the minutes were released, so between 2 and 2:30, you had the ES Mini trade down to 1760.75. 1760.75. Now, if you go from the actual swing point low that came in Sunday evening after the China PMA numbers were released out here, the actual low that was made at 9:30 in the evening out here, 10:30. Let's see, at 22:30, whatever that equates to. Sorry about that. So I don't have to do the actual math out there. The low during that session was 1754. Now, this high that we had seen, when we take a look at retracements, the high that came in was at 10:30 in the morning. This was on December the 16th. That was at a price of 1786.25. If you go from the low to the high, you'll see that the price of 1760.75, the exact number, was your 0.786 retracement. So I believe that Uncle Ben and crew out there, because there was no way now it's easy to be a Monday morning quarterback, isn't it? But I'll give it to you. I'll give you my take on the Monday morning quarterback. Uncle Ben is what a smart guy, really smart guy, right? Figure he'd been through this whole taper thing once before, saw what the, had to do a little bit of backpedaling, wasn't really prepared. Maybe thought that the news would be good, so there was no way that he was going to go out on a bad note, and nor did he. And so he must have known about days. You know what? We know that initially the market's going to have a negative response because certainly they did last time, right? Part of functional fix in this, in essence, the way you do anything, it's the way you do everything, do it always over and over again. In any event, he must have had his folks sitting out ready to buy at where? That's right, at good old Fibonacci 0.786, right at 1760.76, because that was the low, came in right to the dot. Now, what it was also doing, because he must have been using our channel lines, our Bud Rolfe channel lines out here, because price came down and tested the price channel that it had broken out of one more time before it decided to take off to the moon, and off to the moon it was. We got bullishness across the board out here. You got the New York Stock Exchange. That is in total bullish mode out here. Yesterday, we had a full moon come in yesterday as well. That has marked a pretty good low. The market here should rise all the way into the very early part of January out here. Doesn't mean that we won't have some pullbacks out here or some non-believers. But that's just simply the way that it is out here. You got all the patterns. You got everything that you need. If you're thinking bearish, don't be thinking bearish yet. Don't be thinking bearish now. There's no signals out here. In fact, any of the potential signals that were out there, of course, the month is not over. The biggest bearish signals that you could have had really were coming from the New York Stock Exchange. And if we take a look at the New York Stock Exchange, let's go do that. Here is the monthly chart. Well, the biggest bearish signal here was the mere fact that it could have been forming. Still could. The month's not over. But it was the first time where it could have been forming an actual bearish engulfing candle. That's where you actually engulf the prior session, the body of the prior session. Hey, anything could happen, right? In order for that to occur, you would need to see a close this month in the NYSE below last month's open, which was 10,010. 0.27 out there. But you can see right now you're up at the top of the range. More importantly, as we've been pointing out here, look, you are inside a swing point. On a monthly chart, you're inside the swing point from October. When you're inside a swing point, you're going to go finish it off. And to finish it off, says the NYSE wants to get up to 10,387. That is the high, 10,387.17 from October of 2007. Look, folks, you get above that, we'll then have all of the indexes. We'll have the Dow. We'll have this S&P, the NASDAQ. Well, yeah. You won't have the NASDAQ composite up at over all-time highs, but you'll have the New York Stock Exchange participating as well. It looks to me like that's probably where we end the year, with a test or somewhere right around above that high of 10,387. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading down 11 points out at 16,156. S&P is off 4.5 points. It's trading at 1806. Composite down 12 at 4,058. Russell 2000 off 4 points at 1129. Apple down $2.50, trading at 548. Microsoft back 20 cents. Google off $3 right now. Leading the charge to the upside, IAC Interactive. That's up 7%, up $4 and change. Accenture, ACN is the ticker symbol, up about 4%, $2.84. Alimera Sciences, ALIM, that's up 77%. That is up $2. Let me see, what is this all about? An FDA something or other. That is having one heck of a move. You've got Carnival Corp, CCL, up 4%, up $1.40. Oracle's up $1.44. Cabot Oil and Gas, COG, up 3.5% this morning. To the downside here, you've got Semitech, SMTC, off 17%. That is a leader to the downside. Let's see, what do we have out here? I guess their shares are plunging on some type of Q4 outlook out here. I don't see what that is. Rosetta Resources off $3 this morning. That's down 6%. Tesla's off $1.53. Baidu's off a couple of bucks. Icky Bank off a couple of bucks out here. Darden Restaurants down $1.82. Let's go take a look here at the Goldilocks and Silver. Let's go see what they're doing. Then I'll get back to a question posted in the Tiger Den about the SPY and being able to clear a swing point high. So we'll take a look at that for sure. But let's go take a look at Goldilocks and Silver. Let's go over and take a look at the gold chart. Right now, gold is trading out at $1,200, just about even. Steven is down $34. Let's pull this back out here. Now, what gold is doing, still trading inside that June 28th swing point out here. The swing point low is 1179.40. There's an A to B equals CD down that it would complete at 1178.90. Volume is going to be key. Got 261,000 contracts. I'm on the continuous, so I believe that is correct. We'd have to go take a look at the July contract in order to confirm that. But we'll use 261,000 as our benchmark right now. Volume is 114,000 contracts here, so we'll see if they can get gold moving to the downside out here. The key is going to be now that swing point low. Look, whether it's on light volume or not, if you close below 1179.40, that sets up a whole new element, and that whole new element here. Let's take a look at some different time frame charts out here. So Goldilocks, the potential. Let's look at a shorter term time frame as well. Let me see what kind of charts I have here. Let's see what I've got. I have I only have the weekly. And here's a daily chart. Let's look at an intraday chart. Let's go down to that was the GLD. I don't want to look at the GLD. I want to look at the continuous contract. So I guess I have to just shift over from this. Let's take a look at gold on. Let's go to a 30-minute chart here just to see what it is that we have going on. Let me get rid of a lot of things out here. Let's get rid of that too. Okay. So as we can see, volume here. This little high volume low that took place at 9 o'clock. There's some volume down there. No bullish candles that I see thus far. If I'm just looking for just some smaller patterns out here, the A to B equals CD down that we would use here is coming from the 10 a.m. session on December the 10th. That's your A point. The B point is at 5:30 in the morning, December 13th, down at about 12:19. 50 makes a retracement. Looks like probably about a 0.618 retracement. You can see we're below the 1-to-1 A to B equals CD. That says on the intraday chart 1190 is its next stop out there. It does not mean that that's where it stops. Remember, A to B equals CD patterns. They only complete the 1-to-1 60% of the time. The other 40%, they're going to do something different. So let's take a look on that intraday chart. Was that a 0.618? Yeah, almost an exact 0.618 retracement on the way up. So the way that and boy, look at that descending price channel out here just off of these highs back at about 10:30 on October 30th out here. Let's look at the longer term time frame. Let me switch this back to a daily. Let's look at the weekly chart. Oh, shoot, I lost all my daily data. That's what I didn't want to have happen. Oh well, so goes it. I just simply will have to redo that whole chart. Let's go take a look at the the weekly chart out here. The weekly chart of gold. Let's get rid of that line out here. I don't want that one. That doesn't actually even look right. That was the hourly of the dollar on a weekly basis. So as we take a look at we are down below the December 3rd, 2009 swing point high. So that is important. That's this black line going across my screen out there. So that is a level that should act as support. Now the week is not over. We're looking at a weekly chart, so that certainly does matter out here. That December 3rd, 2009 swing point high. That level is at 12.27. Now, we also have these primary trading range boundary lines that it's trading into. So at 1176.90, right where we've got the low in June, right where we've got an A to B equals CD down on the daily chart. Now let's use let me use my countdown system where it counts the troughs. So it just takes advantage of Basil's teachings to us out here, and we're going to start here with the August 30th level. So let's go use my little tool that I've got that will go ahead and count down. Oh, I take that back. So we're now what looks like to be in the 5th or 6th level now. So we're in what A, B, C, D, E, F. F would be the area. I don't think that qualifies. I know it doesn't qualify as an instant restart. Of course, we could be starting a brand new one down here. Let me do this, because I know that to uses sometimes combos out here. So let's do this countdown. No. So on the weekly chart out here, if you get below 1176 out here, what that says, that starts to bring in the 1111 area. 1177 actually brings in the 1043 range. Now, that's pretty interesting because now this is the weekly chart that we're looking at. You've got the descending price channel that gold has been in here. And the bottom of the price channel, the way that it is marked out here, what I'm using the high that came in back in February of 2012 out at about, I'm using the open, I should say, at about 1770. And what's interesting as we condense this chart a bit just to see where that next trading range at the 1043 would take you right down into the bottom of that descending price channel. So if gold, in fact, here does break the swing point from June 28th, I would say that the 1043 area would really be its next stop out here. So that's on Goldilocks. That's taking a look at the weekly chart. Let's go take a look at silver out here. You've got silver trading off 80 cents. It's down about 4% here this morning. Now, even though it's down 80 cents, it's really not doing too badly in comparison to Goldilocks with regard to where it's at inside of that June 28th swing point. It's the daily chart that we're looking at. Volume-wise, so far inside silver, it's pulling back with 30,000 contracts. The last time down here was 38,000, so it's picking up steam as it's dealing with the December 4th swing point out here. You've got an A to B equals CD down. The test in silver is going to be down at the lows of about $18.18. Inter-session here. So far, what we have had inter-session inside of silver has been down to $19.11. So it looks like it's got another $1 or so to move down to. Let's take a look at light sweet crude. Let's see what it is doing out here. Got light sweet crude. Does look like it's now trying to, if it can get clear, 98.75. 98.75 is a swing point that it formed on December the 11th. That is the high. That could be 264,000 contracts on that session. You're up into it right now today with very light volume on. I guess I don't have the proper volume read on this, so I can't give you. There's no way that it's 4,400 contracts. That much is for sure. So I'm not sure why I'm not getting the proper feed there. But in any event, if regardless of volume out here, if in fact light sweet crude can clear 98.75, it'll be forming an A to B equals CD up. That'll take the black liquid up to about the 104 area. That would be its next stop. If we take a look at bonds out here, bonds yesterday having a pretty wild ride. Looks like bonds still want to move down and make that 1 to 1.272. A to B equals CD down, take it to about the 127.13 level. Let's take a look at natural gas, see what it is doing out here. You got natural gas, closing the little gap. So it's got this resistance. Right now what it is testing here, it's got an open window. An open window is caused by a gap out here. So this is really the first test of it today, and that is the low of $4.34. We'll draw a line across the screen. And so that's going to be important because a gap down here, if in fact this level holds, we'll use a red line going across my screen. Now, if you get 3 tests of this area, that would then suggest that becomes a strong area of resistance, and therefore we would start to see maybe a little bit deeper retracement inside of natural gas. Now, this is the continuous contract that we're looking at on my screen out here, but that is what it is doing now. If it fixes that window, that's no longer an area of resistance. And so that gap then goes away, and actually it says natural gas could, in fact, run higher, not just up to the highs of December 13th out at, at 444. But the only resistance right now that we've got, in essence, is really the 100% move of a move. Okay, so it dealt with that. It has gone ahead and it has backed off. Then you get the gap down out here. And as I say, if it closes today inside $4.34, that window will be closed. That gap will become irrelevant as an area of resistance for us. You could use it as an area of support, but it would be irrelevant as an area of resistance. So we'll come back. We'll pay attention to natural gas certainly tomorrow. If we take a look at the currency market out here, just to go to the first question that was inside of the den. Well, not really a question out here, but one of our Tigers was drawing some of the channel lines out here. This is the weekly chart now for the U.S. dollar, Japanese yen. Now, what it is dealing with here, it's dealing with a little bearish engulfing candle, and that is from the session of May 24th. So if you take a look at natural lines of resistance, it goes back to the May 24th high. That's at 103.72. You're up and over that as we speak here right now. With the U.S. dollar, Japanese yen being up and over that, if it closes over 103.72, that level of resistance should then become support. If that area holds as support, says that the U.S. dollar, Japanese yen will want to trade up to the 107.81-ish range. You can see the nice rising price channel that it's in. The blue and the red lines going across my screen, those are the primary trading range boundary lines for the U.S. dollar, Japanese yen. So you can see the 107.83 level. You'll see that's a darker line. That is the largest area of co-located opens and closes inside of the weekly chart for the U.S. dollar, Japanese yen. So that should be a pretty significant resistance level. Also, if we take a look at the U.S. dollar, Japanese yen, what it is doing at the present time, it's doing nothing more than it's forming a one heck of a nice subcorrection here as it goes from the low of the descending price channel all the way back up to the high. Believe it or not, the U.S. dollar, Japanese yen doesn't really break out doesn't really break out until it clears this red diagonal channel line, and it'll have to be, I can't tell you because from a timing standpoint, I don't know at what point in time it actually hits that level, but it's going to be somewhere right around that 107.82-ish range out there, and that's on the U.S. dollar, Japanese yen. If we go take a look at the Queen, let's go see what the euro is doing. The euro here on the weekly chart, running into that resistance zone, both a diagonal and horizontal resistance zone. The diagonal zone being the descending price channel. Also, just like we were looking at in the U.S. dollar, Japanese yen, the descending price channel in this case going back to 2008. I didn't give you the time frame on the yen. Sorry about that. Let's actually do that for you. That price channel, that descending price channel, that takes us back into 2002. So that's how long that price channel has been out there. In the euro, as we take a look at the euro, you can see it also had this horizontal resistance set up by this bearish engulfing candle from the trading session on November 11th, and that was at 138.16. Of course, the high of the prior session really became resistance. Now what we'll see the euro should pull back to about 134.9 out here. That's your 0.618 retracement. And what it also is, it is the bottom of the little rising price channel that it is in. You've now got, we clearly have the euro traveling with inside this triangle apex out here, and we'll see which way it's going to bust that. Can't really say which way it's going to bust at this stage, but we know we're in really kind of a narrowish type trading range inside of the Queen. Let's go take a look at the Great British Pound, as long as we're taking a look at the currency pairs out here. Great British Pound, U.S. dollar, that had quite a rally yesterday. That was really coming off of a C point of a potential A to B equals C to up. That should take the pound into about the 167-ish area. If it can clear that, that's just simply the measured move that's going on, 168. Of course, in the pound, I know we've taken a look at its longer-term chart, so it's got some major overhead resistance as well. That is at the 165-ish range out here. But real resistance, if it can bust through 165, ends up being the April 29, 2011 high at about 167.4. That is in the Great British Pound. Now, back to the question about the SPY that I was asked about inside the Tiger's Den. Let's go take a look at the ETF. And the question was, Steve, SPY failed to hold year-to-date low volume high of 181.75. So let's pull up the SPY. My assumption is that it's been 181.75. That's in November 29th. So my assumption is that the question is that it's a daily chart that one is looking at. So it's a daily chart one is looking at. The actual high, 181.75. Yesterday, you got up to 181.73. So you stopped 2 pennies before it, which hasn't been tested. You're coming into a swing point with volume. What kind of volume? Well, November 29th, obviously a partial trading session at 55 million. Let's double it. Let's make it 110 million. You came into it yesterday with 234 million. That B point is going to be taken out with volume as well, I would believe. We'll come back. We'll take a look at the SPY for Jay in the Tiger's Den.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 27 points. S&P is off 6. Composites down 13. Russell 2000 is down 4. And we're going to go back to the question that was posted to me in the den. The question was, the individual was looking at the high so far that we've had inside of the SPY. And that came on November 29th out there. That was at 181.75. And the question that was posed was, don't we need to clear that hurdle in order to be bullish? Now, the workshop that I'm going to be holding this evening at 6:30, everybody can attend. It's real easy. Go to the homepage at TFNN.com, sign up for it. Take you just a few minutes to do that. First, I would answer the question this way. Maybe that the trend is your friend, and that's really what this evening's workshop is really all about. It is trading in the direction of the trend, and you need to be able to take a look at trend, in my opinion, on multiple time frames. So I don't know what time frame it is that, in essence, Jay is taking a look at. However, what I can tell you is we take a look at this chart here. If you're watching us on TigerTV on the monthly time frame, this is an absolute bullish mode. So even though that's the high that's in here, it's that's just a small hurdle. That doesn't mean that you would be bearish here, because the opposite of don't we need that in order to be bullish? The answer is no. This monthly chart here shows that, quite frankly, we changed to a confirmed bullish mode back here in when is this? This was 2011, in October of 2011, as it cleared a hurdle. That's the hurdle that I'm going to be sharing with folks this evening at 6:30. Now, that's on the monthly chart. Let's take a look at the weekly chart. What hurdles really needed to be overcome inside? You can see we're still in this little cautionary zone. Now, we're in this cautionary zone because, as Jay picked up on the week of November 29th, that is a little hurdle that needs to be crossed. That does not mean that it is bearish, because the opposite of, don't we need that in order to be bullish? The weekly chart says this is absolutely in strong bullish mode, very strong bullish mode. A little bit of a hurdle here. The SPY does need to close that to move on and then start to get up into that super bull mode out here, but no reason to be bearish on the weekly chart whatsoever. In fact, on the weekly chart, you went into strong bullish mode right back here, January the week of January 4th, 2013. Look, the whole reason that I developed this whole system was I got sick and tired, absolutely sick and tired of having to trade right and getting jostled out of it because I, myself, even with all the tools that I did have, because of that functional fixedness that I talked about early on, because of the tools that I did have, they really didn't teach me about the trend and the power of the trend. It's more than just about making higher highs and higher lows. It is way more than that, and that's what I'm going to be sharing with folks this evening. If we take, and guess what, I don't have to be sick and tired of it anymore. Newsletter subscribers that have been newsletter subscribers for a while, they know that. We were not short yesterday. We were in neutral. We ended up taking a long position after the Fed announcement. Now, on the daily chart out here, the daily chart, this shows that we really went into a nice buy mode. You're into this bluish area. You know, if my candles weren't, the bodies of the candles weren't green and red, I would have made this a green area. So I went with blue. Blue skies, baby. And in this case here, we are in a nice mode. So you came into that level with volume as I come back to just simply my volume charts out here. And what the spies want to do is they want to go ahead and make an A to B equals CD up, take us into about the 184.29 level, maybe 186.22. But there's nothing bearish about this daily chart that we're taking a look at. There aren't any bearish reversal signs or candles. If I go back here to take a look at it, they're just simply, there was there's no bearish signs. We're over. The only bearish sign that could have been out here would have been this bearish engulfing candle, and that was from the trading session of November 18th out here, and that high was 180.50. And once we cleared that, that was clearing the only hurdle from a bearish standpoint that needed to be out there. So Santa Claus, folks, has arrived. It is Uncle Santa Ben Bernanke out there. It did not deliver coal. This market will trade higher into the end of the year. Thanks so much for being here, folks. It is terrific Thursday. Have a great day. Otherwise, I look forward to seeing you in about 8-10 minutes or so for the second hour. Take care, folks. I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage at TFNN.com to sign up for this once-in-a-lifetime opportunity.